Welcome to Business Review, a daily program that delves into the latest and most significant economic stories. From stock markets to currency news, Business Review covers the most up-to-date stories in the global financial world.
Strategy Market Global Head Currency Strategy Market Research (FXDM) Jameel Ahmed warned that the impact of coronavirus on financial markets will persist into the second quarter and could see the global economy tipped into recession if the situation severely worsens. Coronavirus panic sent world share markets crashing again on Friday, compounding their worst week since the 2008 global financial crisis and bringing the wipeout to $5 trillion. Hopes that the epidemic months in China late last year would be over in months and that economic activity would quickly return to normal have been shattered as the number of international cases have spiraled. The global head of currency strategy and market research, Jameel Ahmed, said the knock-on effects would shake business confidence and productivity, then flow on the consumers. Disruptions to international travel and supply chains, school closures and cancellations of major events have all blackened the outlook for a world economy that was already struggling with economic crisis. Ahmed said resisted the global economy could be tipped towards a recession, but in the short term, it was more likely the market would enter a bear market in terms of global equities.
Factory activity in China contracted at the fastest pace on record in February, highlighting the damage from the coronavirus outbreak on the world's second-largest economy. China's official Purchasing Managers Index, or PMI, fell to a record low of 35.7 in February from 50.0 in January, the National Bureau of Statistics said on Saturday, well below the 50-point mark that separates monthly growth from contraction. Analysts polled by Reuters expected the February PMI to come in at 46.0. The somber readings provide the first official snapshot of the state of the Chinese economy since the outbreak of the coronavirus epidemic, which has killed almost 3,000 people in mainland China and infected about 80,000. The NBS added China's economy is widely expected to suffer another sharp blow in the first quarter of this year, pressuring policymakers to unveil more stimulus measures. A sub-index of manufacturing production nosedived to 27.8 in February from January's 51.3, while a reading of new orders plunged to 29.3, down from 51.4 a month earlier. Factories continue to lose jobs at the fastest pace in years as labor conditions remain tight amid the travel restrictions. China's leaders have urged local governments, factories and workers to restart operations as soon as possible in less affected regions, but the response has been slow and many migrant workers, including those in worst-hit Hubei province, have yet to return to work due to stringent quarantine rules and ongoing travel bans. Official data shows that only about 30% of China's small and medium-sized companies have resumed production as of Wednesday. Some firms that have restarted work are reportedly running below normal capacity. Small and mid-sized firms account for more than 80% of nationwide employment and over 60% of gross domestic product. China's services sector activity also posted the deepest contraction on record, with official non-manufacturing PMI dropping to 29.6 from 54.1 in January, a separate NBS survey showed. Transportation, tourism, catering, and entertainment sectors have been hard hit during the coronavirus outbreak as people avoid crowded areas. A sub-index of construction activity, a key driver of growth, stood at 26.6, down from 59.7 in January.
The National Bureau of Statistics has said on Friday that China reached a year-on-year GDP growth of 6.1% in 2019 and achieved its economic growth target. The growth target set by China for 2019 ranged from 6 to 6.5%, which is a bit lower than 2018's 6.6%. However, China has still registered an annual GDP of 99.087 trillion yuan. In 2019, primary industries added 7.047 trillion yuan, secondary industries added 38.617 trillion yuan, and tertiary industries added 53.423 trillion yuan, growing 3.1%, 5.7% and 6.9% respectively. Consumption remained the major driving force of China's economy, contributing 57.8% to GDP growth. Additionally, capital formation and net exports of goods and services respectively contributed 31.2% and 11% to the growth. China's per capita GDP reached 70,892 yuan in 2019, up 5.7% year-on-year. The gross national income was 98.845 trillion yuan, an increase of 6.2% from the previous year.
Japanese shares plummeted in heavy volume on Friday, February 28th, to their lowest in nearly 6 months, as global markets sold off on the rising possibility that the coronavirus outbreak would become a pandemic. The benchmark Sky average tumbled 3.7% to 21,142.96, its lowest closing level since September 5th. The index was down 9.6% for the week, the biggest in 4 years. For the month, it was down 8.9%, the worst in 14 months. Investors are concerned about the Japanese economy as World Health Organization Director General Tedros Adhanom Ghebreyesus warned the virus could become a pandemic as the outbreak spreads to major developed economies such as Germany and France. Meanwhile, in China, the stocks closed lower on Friday, with the benchmark Shanghai Composite Index down 3.71% to finish at 2,880.30 points. The smaller Shenzhen Index closed 4.80% lower at 10,980.77 points. The Chi-Next Index, which tracks China's Nasdaq-style Board of Growth Enterprises, was down 5.70% to end at 2,071.57 points.
European shares slumped again on Friday, on course for their biggest weekly decline since the financial crisis in 2008, as investors feared that the rapid spread of the coronavirus outside China could trigger a global recession. The pan-regional stock 600 fell 2.7%, deepening its slide into correction territory, a 10% decline from its recent peak, along with markets in the US and Asia. The index is currently trading 12.7% below its all-time highs. Miners, travel and leisure stocks and technology were the biggest decliners, down more than 3%. Germany's BASF also warned that earnings could drop further this year as the fallout from the outbreak weigh on demand from its industrial consumers. Its shares fell 4.85%. In Frankfurt, the DAX was down 5.1% as analyst Robert Halver of Baader Bank said he expected a technical recession in Germany and other countries in the first and second quarters. The standard technical definition of a recession is 2 consecutive quarters of economic contraction.
Japanese Prime Minister Shinzo Abe pledged on Friday, February 28th, to take policy steps as needed to prevent the coronavirus outbreak from dealing a severe blow to the country's fragile economic recovery. He said the government still had sufficient reserves to tap for emergency spending related to the coronavirus epidemic, signaling that he saw no immediate need to compile a fresh spending package. Abe's unprecedented move late on Thursday, February 27th, to ask local authorities to shut schools means students will be out of school from Monday, March 2nd, at least until the new academic year starts in early April. Meanwhile, Prime Minister Abe on Saturday called on the public to contain the coronavirus outbreak in the coming weeks as the country prepares to hold the Olympic Games in Tokyo as planned. Abe said Japan would go ahead with both the Summer Olympics and a spring visit by Chinese President Xi Jinping. He said measures using 270 billion yen or $2.50 billion in budget reserves, including steps for smaller firms, would be coming in the next 10 days. By Friday, infections in Japan topped 200 with 4 deaths, excluding more than 700 cases and 4 more deaths on the quarantined cruise liner Diamond Princess docked in the port of Yokohama.
This has been Business Review, your daily source for the most critical stories in the financial world. Tune in next time for the latest financial news impacting the world economy.